How's it going, everybody? It's Stas here, and in this video, we're going to be talking about the stock market, breaking down the top stocks and ETFs that I'm watching and looking to trade as we're kicking off the month of May here in 2020. And I also want to go over the stock market futures. You guys saw in the title, as of right now, they're gapping down. So I want to take a look at the S&P, the Dow, and the NASDAQ, and in general, share some thoughts with you guys that I'm having on the markets. We'll break down some charts here, and I'll give you guys my opinions on where we can go. Again, I don't have the crystal ball, but where we could potentially be going here in the short to medium term. And we also got some news from Mr. Buffett and Berkshire Hathaway about the airline stocks that you guys probably already know about, but we'll also dive into that in today's video, and I'll give you guys my thoughts on why they ended up doing what they did. So if you guys enjoy the video, as always, hit that like button for me and consider subscribing. And if you guys actually want to support the channel a bit further, me creating all this free content, you can actually use my affiliate link with Webull, link down below in the description, and get 2 free stocks valued up to $1,400 with a deposit of $100. And again, that's linked down below in the description, and I really do appreciate you guys if you do end up using that affiliate link. So let's get right into the video, starting off here with the S&P 500, kind of going over what happened in these past 5 days of trading. Well, here we have SPY, which is an ETF that tracks the S&P 500. So let's pull up the S&P itself before we actually go back to the SPY. So we see here S&P 500 started off last week on the 27th of April. I believe that was Monday. Yes, that was Monday. We went from about 28.50 all the way up to 29.50, so we saw a 100-point pop, but ultimately we ended up closing the week red. You guys can see we closed below where we started on Monday at about 28.20. So we closed about 30 points below from where we started the week. So overall, guys, these past 5 days of trading, the S&P 500, which, if you guys know, comprises the 500 largest U.S. traded companies, the publicly traded companies, it ended up having a red week. But if we actually scale it back a bit, and I'll give you guys exact numbers here, the S&P 500 in the month of April actually had its best month since 1987, going up 12.68%. And the Dow Jones actually had an 11% gain in April, while the NASDAQ, the tech-heavy index, had a 15.45% month. So you guys can see April was a ridiculous month in the stock market when it comes to pretty much every company. You could have thrown a dart at the dartboard out of a list of companies. If you hit any company, you pretty much would have been green. Sure, there are some exceptions, but for the most part, the markets, all the stocks, most of the stocks did very well in the month of April. And when we take a look at these futures here now, guys, and mind you, on Friday, we had a very bad day in the markets, S&P down almost 3%. We can see the futures are bleeding even more. They're continuing red, meaning this sell-off is continuing at least right now. And we'll see what happens with the futures market overnight, heading into the market open tomorrow. A lot can change, guys. We know that the futures can be red, and then all of a sudden they can flip-flop to green overnight. So we have to be ready for anything. But as of right now, the ES, which is the E-mini S&P futures, they're down about $35. They're down a solid 1.25% as of now. And you guys can see, we tried holding 28.40 to 28.30. This was a very strong level on the ES. You guys can clearly see it here. We tried holding the uptrend, and with today's gap down, We broke that trend, and now it seems like we may be going down. Who knows, guys? We may be going down to 2750 to about 2730, 2750. This is the general area of support that I am seeing here on the ES, and you guys can clearly see it for yourselves as well. And when it comes to the NASDAQ, this thing is down about 100 points right now, the futures, down about 1.1%. And with the gap down today, we broke 8,700. We actually briefly held this level, 8,700, which was a pretty strong support over the past couple of weeks, right? And the fact that we broke that, we're headed lower. That's what the technicals are telling me, at least, right? We also broke the 180 SMA, which has been a support over these past couple of weeks. So the NASDAQ futures at this point, support is going to be around 8,500. That's where I'm looking at, 8,450 to about 8,500. And the Dow rather is down about 1.2% right now, down about 280 bucks, trading below a critical support being at around 23,700. So let's pull back here to the SPY here, which again is an ETF that tracks the S&P 500. It's arguably the most popular, well, let's just say it is the most popular ETF that tracks the S&P. And I want to show you guys, and again, like I say on my channel, it's so important to look at multiple time frames on anything that you're looking at. Stocks, ETFs, indexes, whatever it may be. Look at many different time frames. So we can see here on the 4-hour chart, okay, we're reversing. Obviously, the trend is up. But if we pull back to the 3-year chart, the trend is still up. But what you see here is a ridiculous bearish divergence. We can see the S&P 500 is uptrending. It's hitting higher highs, higher lows, right? We saw a ridiculously strong move to 340, and before that, we saw a strong move to about 290, and before that, right around 285. So this thing has been hitting higher highs, higher lows. It's been uptrending, right? But when we look here at the RSI, this is the bearish divergence I'm talking about. Remember, we're hitting higher highs in price, but the relative strength index is telling us that this move wasn't as strong as the previous move. And you guys can see, right, the downtrend in the RSI over the past couple of years, while the S&P is uptrending. So what's that telling us? The moves to the upside are getting weaker, right? Weaker as the years go on. That is not a good sign. That's one of the technical spots and technical things that or factors that many traders, many people have been talking about. And although I don't really trade using Fibonacci, from what I've been researching and looking at, the 61 Fibonacci retracement level was hit dead on, right around 290 to about 295 on the S&P. And let me know down below in the comments what you guys think about that. Again, I don't really trade using Fibonacci. A lot of you guys that watch do, and quite frankly, I saw people comment on my videos telling me this, and I've seen it through other sources as well. So that's an interesting factor as well. So overall, guys, the markets seem to be losing steam over the past couple of years, ever since we saw that kind of rate cut cycle back in 2018. That's kind of where the markets have slowly been losing steam ever since then. And again, I'd love to know what your guys' thoughts are down below. So in the future, guys, we may be seeing a leg down in the S&P, maybe down to about 273, maybe down to 270. A major level I'm seeing here is 265. So those are some thoughts there on the markets. Now, let's jump into what stocks I'm watching. And at the forefront of my watch list, guys, as many of you probably have these stocks as well, are the airlines. The airlines are at the forefront of my watch list because, and not for a long play, guys, for most likely a short play, because we saw Berkshire Warren Buffett came out saying they're selling all of the airlines. They're selling out. They're completely sold out at this point. And Buffett claimed or stated that he sold out of AAL, American Airlines, LUV, Southwest, UAL, United Airlines, and DAL, Delta Airlines. And originally, guys, Buffett thought he was getting a good position in these airlines back in April, or, back in early April at about 10% of the airlines. He kind of wanted to have 10% of the airlines, and I believe his position in Delta was around $40 or something like that. Don't quote me on that, but that was his average cost, which goes to show kind of how down he is on these positions, since Delta at this point is trading at around 24. But either way, his goal originally was 10% of the airlines, the 4 biggest ones. And he, quote-unquote, said in the meeting, I made a mistake. I just made a mistake. We sold them at lower prices than we paid. The airline business, this is huge here, guys, the airline business, and I may be wrong, and I hope I'm wrong, changed in a major way due to what is going on right now with the CV, the whole global crisis. And like I said, back in April, Berkshire Hathaway, actually I didn't say this before, but back in April, Berkshire Hathaway reported that it sold blocks of stock in DAL and LUV. And as of recent filings, here we get into some nitty-gritty numbers. Berkshire had held 70 million shares of Delta, representing 1.7% of the conglomerate's portfolio, according to data provider Whale Wisdom. Berkshire also had roughly 54 million shares of Southwest, representing 1.2% of its holdings, 22 million shares of United Airlines, representing 0.8%, and 42 million shares of American Airlines, about 0.5% of Berkshire, according to Whale Wisdom. The airline industry, and this is another thing, the airline industry, amidst to all this craziness, they received a $25 billion bailout, part of the bailout package. We're seeing like Boeing, a lot of these other companies being bailed out. The airlines are a big part of this bailout package. So why is Warren Buffett selling his stocks here? Well, the first thing is, if you know about Warren Buffett, you know that he sticks to his principles, he sticks to what he understands, and this is what he calls his circle of competence, right? He obviously understands these airlines, that's why he's investing in them. And another thing that he sticks to, which again is one of his principles, when a company sees a fundamental shift, then he scraps the business. And this is kind of a smart strategy, right? If you're investing, let's put it into perspective here. Let's say you're investing in Apple and all of a sudden the huge fundamental shift here, let's say all of a sudden they ditch their iPhone, they stop selling iPhones. Wouldn't everybody just sell out of Apple? Obviously, it's not as extreme with the airlines, but with the obvious lack of demand here and with the economy reopening, people are not going to be as crazy to go out, kind of to travel, use planes, and being around people. This is kind of what Buffett is thinking, in my opinion. That's the fundamental shift there that kind of pushed him to sell out of the position. And you guys have to realize, airline stocks, this is another interesting point that I was thinking yesterday or earlier. Airline stocks, if people aren't using the airlines, it's not like their planes just disappear. Their planes are still going to be there, even if they're flying at 70% capacity, 50% capacity. So the expenses are still going to be there, and that's a lot of expenses associated with planes and just keeping them up and so forth. So that's another big reason. If we're seeing this fundamental shift where people won't be traveling the way they used to over these next couple of months, year or two, whatever, this is not going to be bringing in enough earnings at the end of the day to really keep up and make a good investment with how much expenses, associated with these planes. So that's kind of, in my opinion, the fundamental shift there that pushed Buffett at the end of the day to sell out of all of his, holdings. And if we take a look at these stocks, guys, on a technical basis, they've been running up a lot recently. We saw Delta run from about $22 up to about 29, and you'll notice all of them are in an interesting wedge pattern here. You'll see Delta's in a wedge pattern. You'll see UAL is in a wedge pattern here, and we'll see if Love is. I'm assuming it is. Yeah, it's kind of in the similar wedge kind of ish, a wedge-ish pattern. Yeah, I'd say that's a wedge. So tomorrow, what direction are these going to break? If anybody, honestly, anybody with a brain could assume that they're going to fall down now because Mr. Warren Buffett sold out. So that could be a possibility, but we all know the stock market, right? It loves throwing curveballs at you. You think one thing's going to happen, and then all of a sudden the opposite happens. So I wouldn't be surprised if we did pop up in airlines somehow, but, there's a lot of negative sentiment, and that kind of overpowers the upside, in my opinion. So tomorrow we can see some great opportunities to short these stocks. Again, if we break the bottom wedge on a lot of these stocks, LUV, UAL, what's the other one? AAL. The bottom could completely fall out, and that's kind of where I'm looking to potentially profit on these. So those are some thoughts there on airlines, kind of what Warren Buffett was talking about, and some kind of quotes that he said during his speech and what he was talking about. And I'd love to know what you guys have to think about that, as always, down below in the comment section. So at this point, guys, we should get into some other stocks here that I am watching and looking to trade. So let's get into SPCE. SPCE, and mind you, they are reporting earnings this upcoming week. SPCE is one of those companies that kind of moves independently from the market. We've talked about this before. It's not exactly tied to the movements of the overall S&P, Dow, and the NASDAQ. And that's something I like, especially in the current environment that we're in. So they report earnings on the 5th here of, what is this month? Obviously, the 5th of May. And if they break, guys, this is the level that I'm watching on SPCE. If they're able to break out of 1830, out of this overall downtrend here, this could be a breakout stock, and it's already setting up kind of for a breakout here. You guys can see we double bottomed at about, you guys can see it here, I think $16.13 we double bottomed at. You guys can see it there on the 24th of April, and now on the 1st of May. And guys, take a look. And by the way, it broke out because of their test flight to New Mexico, or through New Mexico, in one of the spaceships, right? I think it was called the Spaceship 2 or something like that. So very good news there from SPCE. And take a look here, guys, on the 5-day, 5-minute. We're noticing a little bit of a bull flag here. Take a look at 1830. I'm telling you, from there we might break into the $19, and who knows, they might fly on earnings. No pun intended, guys. But me, I don't really hold through earnings, so we'll see what ends up happening there. But SPCE, either way, is at the top of my watch list. Another one I'm watching here is Shopify, ticker symbol SHOP. They're also reporting earnings this week on the 6th of the month. And take a look. We saw some strength, or actually weakness rather, at about 660 to about 670 on the stock. We struggled at about 645, 650 as well. So in general, this area is a resistance on Shopify. And now we're actually pulling down, and we retested about 600, old resistance, as a new support, right? So the fact that we held that heading into the weekend, that's a pretty good sign here in my eyes for Shopify. So if we hold 600, 620, guys, heading into tomorrow, that could be a good opportunity. But then again, the markets are bleeding out right now. NASDAQ at this point down about 1.3%. The ES mini futures S&P down about 1.5%. So a lot of these stocks, although Virgin Galactic is a bit independent from the market, Shopify, on the other hand, it could see a further sell-off, guys, if I'm being completely honest with you guys here. And like we saw yesterday, or in the previous couple of days in the market, we had Apple report, we had Amazon report, and we had Facebook report, Google, all of the FANG stocks, right? And these are a bunch that I'm watching as well. We take a look at Amazon. I mentioned this on Friday. They're pulling down immensely, down about 8% on Friday. And in my eyes, I can see Amazon going to $2,200 per share. I think with this gap down we're seeing in the futures, and if it holds into tomorrow, we may be pushing down to those levels. Hey, maybe even tomorrow, maybe Tuesday if the red continues. So keep an eye. If Amazon holds this old resistance as a new support, that could be an absolutely great entry point potentially here for the stock. And we saw Apple. Apple's kind of chilling at this point in between $280 and $300. So we need to see a bit more direction before we pick what side we're going there with Apple. And take a look at gold here, guys. Gold is considered a safe haven for a reason. Not always does it go up when the markets are down, but a lot of the time it does. And you guys can see gold futures are up $5.50 right now compared to the markets, again, being down about, the stock market, that is, the futures, down about 1.5%. So tomorrow we could see some strength in the gold stocks. As we saw on Friday, GDX, guys, had a killer day on Friday. It was at $31 per share. It rallied to $33.40 in one day, making that a move of about 6% in the matter of one day. And mind you, GDX is an ETF. It's comprised of a lot of these gold stocks that I have here, like ticker symbol GOLD, Barrick Gold, Franco-Nevada, NEM, Newmont. So these stocks, guys, tomorrow, especially if gold maintains 1,700, we see a strong push even to the mid-1700s. I think gold stocks are going to rip tomorrow. There's a strong likelihood, in my personal opinion. And another one here that I'm going to be watching is NAT, an oil tanker stock. And this is another one that's kind of an interesting investment here in the short term, and it could really outperform the overall stock market with the current situation we're in right now with oil. You guys know, huge overproduction with oil. We talked about the airline stocks earlier. Well, they're not obviously being used, the airlines. The planes are not being used, meaning they're not using as much oil, but there's still production of oil. So there needs to be somewhere to put the oil. So demand's low, production is still pretty high, and there's an oversupply, obviously. There's nowhere to put the oil. So the tankers, these massive boats that carry millions on millions of barrels, they're doing well right now, NAT being one of the leading stocks. So I think, guys, in the short term, they're going to do well because holding the oil on the ship, the fees that they're getting are a lot higher than when the demand of oil is normal and there's not an overproduction, right, of oil. And we've seen a huge pull down in NAT from $9 down to about $6. Overall, we're maintaining the uptrend here on the 4-hour chart. So there's a lot of positives in my eyes looking at this chart right here. We can see if we break 630, this thing has a lot of room to run, as that would be a breakout sign. So heading into this week, NAT is for sure on the top of my list. And when we're looking at crude oil right now, guys, we're at a spot where we've been rejected in the past couple of months. Over the past couple of months, this has been a general spot where we've seen resistance under the 180 SMA, and we're currently down about 6% on the future. So keep an eye here, guys. If CL dumps, this could be huge for, maybe short in crude oil. NAT might explode at that point, and yeah, a lot of opportunities in crude oil for sure. So I feel like we covered everything that I wanted to go over in today's video, guys. And of course, as always, I'm watching these leveraged ETFs. Although I don't recommend them to beginners, these are not meant to be held overnight. You're not supposed to swing trade them strictly for day trading. I'm watching them in the current environment that we're in. With expected volatility to start kicking up here, markets are looking to sell off. The futures, again, are down about 1.5%. We might see some potential in SPXS, which is an ETF that goes up 3% whenever the S&P is going down. So you can leverage your moves there on the S&P going down. Let's say you think the markets will bounce back up. You can play the inverse, which is SPXL. It goes up whenever the S&P is going up. And let's say you want to play the NASDAQ. You can play SQQQ, which is an ETF that goes up 3 times whatever the NASDAQ is going down. You can see it was up 9% on Friday as the NASDAQ was down about 3%. So you guys kind of get an understanding there of, how those work. And another interesting stock here before we wrap up the video is going to be Walmart, ticker symbol WMT. We pulled down from 134 down to about 120. This could be an interesting dip buy as well. They're also reporting earnings on the 19th of this month. And before I forget, oh my goodness, guys, almost forgot again because I forgot to mention on Friday, Tesla stock. Did you guys see Elon Musk go absolutely crazy on Twitter on Friday? Let me just pull up some tweets that he was saying. This guy lost his mind again. He is off his rocker again. He tweeted, Tesla stock price is too high in my opinion. The stock went down 10% on Friday, down 80 points. You guys can see when he was going on this Twitter spree, the stock went from 772. It went down a bit, 740, popped back up to 772. And this is where he went on the spree. The stock went from 772 down to about 683. And he's also going off about now give people back their freedom. Oh, the land of the free. We won't get into those, but you'll see this guy was just going absolutely crazy. Was he hacked? Was he not hacked? Is this against SEC regulations? I don't know, guys. I'm not the right person to ask here. I guess we'll have to see. But overall, it must be frustrating for Tesla shareholders. Well, I am a Tesla shareholder. It is kind of frustrating, but for me, it's not as bad because my average share is down in the 300s. But for people that just bought, let's say, at let's say you bought at 800, 700, and now he tweets this out. You bought at the high 700s. He tweets this out. Yeah, I would be pretty frustrated. It is annoying, but that is, at the end of the day, a risk that you take by investing in Tesla stock. You have to realize that Elon Musk, he's a visionary, he's brilliant, he's great, but he's also erratic at some times. He does go off on these little sprees that could end up influencing the stock. So you guys have to realize that. But overall, we're heading towards a support, whether it's 675, whether it's 650, we might be holding this. And I don't think this will tank the stock completely. If the markets do pull down, we might see an overall pull down in Tesla, but then again, it's kind of like Virgin Galactic where it moves a bit independently. So we'll see, guys. Only time will tell. And I'd love to know your thoughts down below in the comments as always. So if you guys enjoyed this video, hit that like button for me. Consider subscribing to the channel. And again, claim your 2 free stocks from Webull, valued up to $1,400, linked down below in the description box. All you guys have to do is put in $100 and you'll get the free money. So I'll catch you all in the next video. Thanks again for watching. As always, guys, stay safe out there. I'll catch you all, guys. Peace out. How's it going, everybody?